Hey, what's up, everybody? Thank you for checking out the channel as always. My name is Drew. I've got a really good one for you today. First of all, we're going to check out the YouTube portfolio, see exactly where that is doing. As well, I just want to let everybody know that I do have a lot of money on the sidelines right now. So I am buying every week into the VOO and the VOG. I do want to let it be known that I do have a lot of money on the sidelines for individual stock investments after we see where exactly the Fed is going. With that, we're going to check out on some news involving financials this week. As well, we're going to go through the NASDAQ, the S&P, and the Russell just to see how well they perform this week. And then lastly, I want to stop off with some of the big name news companies and see what they are tracking as potential buys. So with that, let's jump right on in. All right, so first of all, let's start off with the YouTube portfolio. As you can see, it was actually a pretty good week for me. Total investments this week with all the blood in the market, Monday, Tuesday, Wednesday. As you can tell, I gained about a 0.5% total on my portfolio right now. I did go from about 1.4 to 2.6 in the VOO and about 1.5, I believe. These might be wrong. To about 2.34% on the VOOG. Looks like everything was pretty much up, including Nvidia, which, though is red, did go up this week. I mean, it looks like it was a pretty good week. So far, it's paying off to invest in the S&P style indexes, the value and the growth. Right now, the value is outdoing the growth, which is also something else that I want to look at is which is actually going to perform better, the value or the growth. This year, I do expect value to go up higher than growth, just because with the Fed raising rates, you never know exactly what is going on. But yeah, so the YouTube portfolio is actually looking really, really good. I'm proud of my investments. And come Monday morning, I will be buying a share of VOO and VOOG. I will buy that no matter what is going on in the market. If it's dropped 50% that following week, I am still buying in. I will not stop buying into that until either A, I run out of cash, or B, we hit the 52-week mark. So now that we have a look at the portfolio, I actually just want to jump into the NASDAQ, the S&P, and the Russell and see exactly how well they've done this week, as well how well they've done over the past month. I feel like it's always good to check out the indices and see exactly where they are at, because generally stocks tend to follow going up or going down based upon where the indices are. But yes, this gives you a broad market because we've got the S&P, the NASDAQ, and the Russell. The first one I want to check out is the S&P. As you can see, over the past month, it's up 1.9%. As you can see right here, this little channel, a lot of people like to consider this a dead cat bounce. We will just have to wait and see. With rate hikes coming in, depending upon where they go, if they go up a full 0.5% or 0.25%, will really show what's going to happen here. All right, let's check out the S&P. The S&P as well fared very well in the last 2 days. It is up 3.7%. As well, over the past month, it is about up 1%. But once again, we will have to check out and see where this goes, if we continue to go higher on Monday or not. Only time will tell. And lastly, the Russell. This tracks a lot of your small caps right here. And over the month, it is up 3.26%. And in the last 2 days, it's up 5%. So if you're ever looking into the small caps in a time like this, when they get crushed really, really bad, they generally tend to bounce up really, really well. So definitely something to check out, something I might personally check out as well. All right. So now that we've gone through the major indexes, let's jump on over to the news. I just want to make note as well that I would love to do these as a live stream. So as the channel continues to grow, I will potentially transition into doing these news type videos live stream. That way, if you have any questions or comments or things that you want me to check out specifically, I can go based upon the comments. But with that, you are still more than welcome to leave a comment down below. And who knows, I might add it into the next one. So let's check out the news right now and for this week. Market watch, we have Ukraine war, surging inflation, and wild price swings. Here are some to see. Let's see. Here are some to see the state of the stock market as Biden readies crucial State of the Union. So for those of you who do not know, We are reaching midterm elections. Biden will be addressing a State of the Union. And let's just see if this has anything that we might need to see. So the state of the markets, fragile, of course. Oh, let's see here. Some are referring to as one of the most important such addresses to the nation in recent memory, with inflation at a 40-year high and the COVID-19 pandemic lingering. So the world order feels as if it's in flux. Obviously, this is following. So what with the markets, very volatile to start this year, but still technically up. So very much in flux. Okay, so Jerome Powell will deliver a scheduled testimony to Congress on Wednesday and Thursday on monetary policy. The planned events come after the S&P went up 2.24, put in the largest intra-week comeback, up 8% or 0.8% after being down 5.4. The NASDAQ, the Dow as well, pulling up. Okay, here we go. Going forward, markets are going to find that the Fed's battle against inflation in terms of raising interest rates, raising interest rates, and reducing the size of their balance sheet is going to be a much bigger threat to investors than the war between Russia and Ukraine. And this I agree with. This is why I'm stating just go with the 0.5% right now. Go with another 0.5%. The shock will happen. Unfortunately, the markets will tank. Well, I shouldn't say tank, but they will definitely go down. But at this point, we've got to get a handle on this, and we're not. And as long as they're continuing to print money, we are constantly going to have to be going through this inflation. And then we're going to hit a point in which they're just going to have to come out and do something drastic. So I'd much rather go 0.5%, which from what all the analysts say, they've been preparing for, and just roll with that. So, exactly, the Fed's hands are tied, and they are forced to tighten monetary policy to fight inflation. The more volatile we are likely to see the markets over the course of this year. Unfortunately, it is what it is. Not every year is a 33% hike. We've just got to continue to invest throughout it. But yeah, this is basically on Biden's speech. Obviously, what he says will have a major impact into the markets, into the economy. We will just have to wait and see. Okay, so it looks like that report that I posted yesterday, that it looks like it's becoming more and more plausible. I was also a little worried about it when I put it up, but CNN is now reporting Russia opens possibility of diplomacy. We can only hope and pray at this point for the lives of the people who are being affected right now. War is never okay, and in this case, a ceasefire would just be it would just be great for the people. Warren Buffett, an annual letter, calls Apple one of 4 giants driving Berkshire Hathaway. Whoop whoop! I'm a firm believer in Apple. For those of you who didn't see, my top 6 stocks to buy and hold for life. Apple, number 1. You can't go wrong. I just want to see if he has anything else. So obviously, Apple, he holds. Okay, so his earnings amounted to about $1 million. So they began buying in 2016. It looks like we're not really going to find out much of anything else. Okay, so it looks like his railroad business, BNSF, and energy segment, BHE, as the 2 other giants of the conglomerate. Okay, so that's exactly what I want to see. I want to see what else was potentially holding up his portfolio. All right, let's go back. Let's check out the last. I like to hit it. Okay, Europe at war, 6 charts to know for the financial markets. Obviously, I've done a video exactly how the financial markets act with war. More times than not, the markets go down and then they ride high after that. Unfortunately, I'm only talking about financials, so it just is what it is. There's nothing we can do about that. Let's also check out Russia-Ukraine right now. Let's just do that. All right, we will just go with CNN right now. Let's see. Forgive me if I pronounce any of these wrong. A battle is underway for control of Ukraine's capital, Kyiv. Ukraine prompts UN Secretary General to cancel his Geneva trip. Meta bars Russian state media from monetizing on its platform. For those of you who don't know, Meta is Facebook and Instagram. It's saying the parent. Oh, wow. So Pentagon denies Russia's claims that it's highly likely U.S. used surveillance drones to help Ukraine. That is one thing. Unfortunately, as sad as it is, and as much as everybody wants the U.S. to get into this, Russia is a country in which we've been at odds with for a long time over the way they handle things. Russia, unfortunately, is just as strong, has just as strong as a military presence as the U.S. does. And so, unfortunately, I feel before we drop our troops down there, we need to do everything we can from here without getting dragged in and potentially having an issue with Russia right now. So it looks like everybody's blocking Russia. Ukraine closes border to Russia and Belarus. This is just sad. This is just unfortunate. So, really the only way out of this at this point is, unfortunately, Putin doesn't seem like he's going to stop until Ukraine, they basically shake hands and agree on political policies and things like that. Unfortunately, we're at that. And like I said, I'm not bringing this to choose sides. I do not choose sides. I do not believe that war is needed. I do believe that to sneak up on somebody is wrong. Unfortunately, I'm just speaking it as the way it's looking. Okay, perfect. So, unfortunately, we are still going through that turmoil right now. Okay. Oh, last thing, SWIFT. Germany is preparing to disconnect Russia from SWIFT. That would greatly affect Russia. So we will definitely have to see where that plays out. All right, so enough with this. Let's just go into the last topic on hand, and that is stocks to buy right now. All right, so we have the Motley Fool, Warren Buffett stocks to buy with 300 right now. Let's check this out. I always like going through these because at the end of the day, most of my stocks picks literally come off of what I read and what I see. So for example, if I go back to when I really started investing in individual stocks, Ford tanked because of COVID, obviously. No one was going out, no one was buying a car. Ford is a company that wasn't going to go down. I didn't really have to get into P&E. I didn't have to get into anything like that. Ford stock dropped to about $4. Before that, it was around $8. That's a double profit right there once the economy gets back. That's how I chose Ford, and that stock actually 4x'd. A lot of the times, it's just looking for these patterns. I do not do a day trading style. I buy and hold, and I generally try to hold for as long as possible unless profits are just too great. Chevron. Obviously, Chevron would be a good one with the oil prices going up as they are right now. They're just bound to make money. So Apple, the 5. Okay, so once again, we're hitting on something I've already hit on. Chevron. Okay, so we can read about those real quick. The oil producer has increased its dividend for 34 consecutive years, which is really good, and currently pays an above average dividend yield of 4.1%, which is really good. Even though the stock has rebounded in recent months, Warren Buffett bought an additional 10 million shares of Chevron stock during the fourth quarter, so he still might view the current price level as a good buying point. The stock has risen about 14.7% since the end. And if you look over here on the 5-year, once again, these dividend-paying stocks, a lot of time they stay pretty constant. This is where you want to buy them, is where their prices drop. Once again, this was on COVID, and then ride the wave back up to where its normal level is, and that's generally how you make money on a dividend stock. As it dips, you buy. As it rises, you leave it alone and you let it pay you. If we go to the max, obviously in the 70s, let's just go from a 2000s perspective. Exactly. So you look at a 2000s, 20 years, it was about $45. It has more than doubled and tripled. So that's exactly what you're looking for with a long time buy. And so if this stock dips down to right here again, like let's say in the 80s, buying. I would buy. That would be my price point right there. It could potentially dip lower at some points, but unfortunately we still use oil, so I foresee that. As well, the same thing with Apple. The stock just will not stop. I mean, this goes all the way back to 2017. Imagine buying Apple for about $30 a share. That is wild. It's going from 30 to 150. I mean, that's a 5x or 4x. 4x, 5x. So, all right, so nothing really new there outside of Chevron. Always diversify. It's always good because on the days that Apple's not doing well, Chevron might do well. And in that case, it's balancing your portfolio to navigate the risk. The more entities you have in different sectors, the better you are on these red days. Buy the dip stocks. Let's see, buy the dip stocks. These are probably going to be speculative if I had to guess. Oh, Nike. Nike's a good one. Nike's a good one. They're not going anywhere. They grow. They generally go slower than most would like to buy. I did purchase CVS last year, which was a great buy for me. Walgreens is down over 4.4. So this is definitely something to look at. It's crazy. Since 2017, it has dropped. See what its max is at. Okay. I mean, it looks like it's had drops like this before, but wow, 83. That's crazy. Walt Disney. Okay, so yes, this is something that I am definitely looking into. Walt Disney is down 21.5% over the past year. As you can tell, Marvel is killing it right now. The movies that they are dropping are billion-dollar entities, even if they are sharing it with Sony, i.e. the Spider-Man case. If you can't tell, I'm a big Spider-Man nerd, or a Marvel nerd. But in any case, let's just go to 2009. We'll take about a 10-year approach. We'll go from 2011. 2011, it was sitting at about $33 a share. We are now sitting roughly 140. So once again, a 4 or 5x right there. And they're just going to continue to grow. I mean, they are buying everything up right now. Their movies are straight up killing it. The parks are about to open. Xnay, just the movies. Their parks, travel, everybody's been locked up for 2 years. You can only keep people locked up for so long before they start literally going out and just spending the money. So that is good. Okay, so I like that. I thought there were 6 stocks. Didn't they say 6 stocks? Maybe they said 3. 3 stocks to buy and hold today. All right, we'll check out one more. One more, because I do like this. Motley Fool is generally pretty good, I will say. Buy and hold forever. All right, low volatility stocks to buy right now for steady returns. There you go. That's a good topic. Maybe I need to do on that. Okay, so yeah, history has shown us that it's best to remain invested in the stock market for the long term. The stock market has recovered from temporary dips to print new all-time highs with 100% precision over the past century. Perfect. You can't beat those numbers. All right, 7 potential low volatility stocks to buy for steady returns in 2022. Obviously, with people getting out more, restaurants opening back up, Coke will do really, really well. It has low labor cost ratio, which provide a layer of earnings protection. They are a dividend-paying stock. Coca-Cola stock remains high popularity within investing community. Coke has printed 52-week highs. Okay, that's good. They have historically 10,000 invested in Coke over 10 years ago would be worth 71,000 today. They are printing money for you right there. And dividend yields around 2.9%. And they've not been volatile throughout all these things that have happened throughout the stock market, dating back 5 years. Okay. Global pharmaceutical development giant doesn't pay a regular dividend, but the company retains a market-leading profitability profile that makes it a defensive investment during times of crisis. Okay, 10,000 invested in the stock 10 years ago would grow 59,000. That's still really, really good. Maybe that is something I check out. See, going through these things, you learn new things. It gives you a little more. I will tell you, don't just buy because you see that. Always do your research. Always continue researching what is going on. Texas Instrument, the Dallas-based Instrument, is a global semiconductor business that retains high profit badge of 2022. The company is ranked among the world's largest of analog chips, okay? Stock price is up 113% over the past 5 years. Common stockholders receive a regular dividend of 2.8%. So this is one of those gainers, a dividend-paying stock that is as well going up. That's a really good thing to look into because those dividends reinvested time and time again, reinvesting your dividends, compound interest, good thing. So it's more stable over the broader equity market. Info is a global information technology service provider with more than 1,700 active customers. Okay, so it is small. The company is steadily growing its customer base, $15.6 billion in revenue over the past 12 months. Steady revenue growth, slow operating costs, that's always good. Free cash flow generates business and its high dividend growth rates, which help investors steadily build a wealth position over time. That's a 1.8 dividend yield. It's up over 188% over the past 5 years. So that is right around a 2x, which is great. 20% growth revenue for 2022 and a good 14 annualized earning rate. All right. Garmin, GPS-enabled hardware and software for the fitness industry, outdoors, and okay, so they're still doing the outdoors. Earnings were negatively impacted by supply chain crisis. Okay, so that one I would definitely look a little more into if they're being hurt by that. The Northrop Grumman, aerospace and defense technology. Okay, so that's definitely something for right now. When you're looking at times of war and things like that, you can always generally count on the Raytheons. Anything that's involved with war during war, prices will normally go up. Berkshire Hathaway. So obviously A and B. If I'm not mistaken, one is at a lower price. All right, so with that, I hope I was able to bring you a little bit of news for this week, give you an idea of what's going on. Look out for President Biden's State of the Union. That is going to be big this week. Watch out for what Jerome Powell, anything that leaks about him and what the Fed might be doing. As well, be mindful of the times that we're in right now. Anything can happen. Invest wisely. Do your research. Just like today, a few stocks caught my eye. I'm not necessarily dropping the money on them. I will continue to look into them. Knowing me, generally I watch the stock for about a week, see exactly what it's doing. I read within that period of time, and if it's something that I believe in, then I will buy into it. You can buy off of PE and all these analytics and things like that, and that is very smart. But as well, the last remaining factor that's going to keep you in that buy is if you believe in the company. If you don't believe in the company, that first red day, you're going to cut out. You're going to get out. If it drops 8% in a day, you're out. Do not jump into something that you don't believe in. So, as usual, thank you for checking out the channel. Make sure you hit that like button, subscribe, click the bell for post notifications. And so, yeah, with that, thank you once again. Let's get out there and make some money. Peace.